Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Monday, March 30th. Hope you guys had a wonderful weekend here. We got just one item here on the economic calendar, and we'll jump right into it, and that is the pending home sales for the month of February. So as you can see here, January had a month-over-month increase of 5.3%. However, February dipped a little bit down to 2.4%. And we'll probably see this continue to dip going into the new shift of the market that we've currently was pretty dramatic here in March. So a lot of the data we'll look at still, if you haven't caught my videos before, probably won't matter much, primarily because these are before the dramatic shift in the market with the coronavirus that's going on out there. Um, let's jump ahead here to the headline news. Stocks are up so far this morning. It's kind of rebounding a little bit. We've been kind of going this seesaw back and forth a little bit, but today it's up. Um, they're looking at a little bit of the coronavirus. The president had increased the time frame, the policies until April 30th. They think that will probably be reaching the height here pretty soon in next couple of weeks. Um, However, we can never be certain of what's going on out there. What's out there. So, in any case, the policies again were extended. We're up well over about 143, I think, thousand infections cases that have been confirmed, and about 2,500 deaths, unfortunately. And of course, our thoughts and prayers are out to those who have lost their lives, as well as the families to those folks. So, kind of a travesty that this is happening. Let's kind of move along here. We got the headline mortgage-backed securities. So as you can see, we've been having this upward trend on the mortgage-backed securities. It's being propped up by the Fed inducing a lot of purchases in the treasuries and mortgage-backed securities. We're up currently about 44 basis points. However, as I've done this, we're even up a little bit further. As you can see with this wick, this has been kind of dropping down a little bit further. And as I've just started doing this, it's dropped down to about 25 basis points. So, but we're trying to break ahead above this new floor or no ceiling of resistance right here that we left up on Friday. It kind of held us in check on Friday. So we'll kind of have to wait and see if we can keep above that or not. And here's yields. It's dropped down. It's down to about 0.6 right now, as you can see right here. And again, there's room both ways for it to increase or even drop for that matter. All right, so no matter that we're seeing this improvement in mortgage-backed securities, we're not necessarily seeing that in the terms of the rate sheets that loan officers get when we quote rates. A lot of it has to do with lenders and their wholesale lines losing liquidity due to margin calls that are when they're hedging these loans that are locked in the pipeline, and then that the rates don't go higher, and they hedge these, and then of course they're getting tens of millions of dollars they have to write. They get these margin calls from the credit lines and stuff, so they have to pay these out tens of millions of dollars just in order to go ahead and to go ahead and fund these loans. And right now, with these with the mortgage-backed securities going up, what happens is that interest rates typically will improve, but in this case, it's not improving because they're artificially increasing that to try to stave off any trying to get through their pipelines. They got such a big influx this past month that they're trying to get through it, but meanwhile they're getting hit with liquidity and are unable to actually fund loans as a result of this inadvertent attempt by the Fed to try to prop up the housing market. So we'll probably get this taken care of, but at some point, in the meantime, they're kind of bleeding a little bit in terms of cash to go ahead and get loans funded. So as a result, there's no appetite right now for like jumbo loans and Alt-A, or not Alt-A, but now it's called non-QM loans, as well as even with the government loans, we're even seeing them being very picky in terms of FICO scores, higher FICO scores, and maybe even in DTI, debt to income ratios and stuff like that. So if you're out there looking to refinance or buy, those are things you're going to have to work and navigate your way through. And having a good, knowledgeable loan officer definitely will help you out. So if you guys are in California and looking to buy a refinance, please reach out. We'll certainly help you navigate you through these troubled times we have right now. The best way to reach me is direct message me or email. That information is in red there. And email is the quickest turn time that I do respond. So you guys have a great rest of your day. Thanks so much for watching. We'll catch you guys tomorrow. Bye-bye.